Hello traders, Douglas here. I've been on vacation for the last 3 trading days, so we're going to go back to the last live day I traded, and we're going to take a look at something very important, something that's very difficult for new traders and even experienced traders to understand, and that is your winning percentage is only a small factor in your profitability. So let me say that again, your winning percentage is only a small factor in your profitability. All right, now typically, especially new traders and inexperienced traders are laser focused on winning percentage. All they want to know is entries. I want to know the best entries, how to find the best entries, what indicators give me the best entries. And that's basically where their knowledge and curiosity begins and ends. And they're looking for well above a 50% winning percentage because they think they need it to survive. But as we'll see today, that is not the case. And let's get right into what happened to me on this day. So no time for dilly-dally traders. We're just going to keep skipping through here to the interesting parts. So this is the open, 8:30 Central. I am on Central Time, so 9:30 Eastern. You've got right at the open, you've got this sweep here. Now, I'm using the TTW Tradefinder indicator, and so on its sweep detector, it is detecting sweeps of a single order ID. So what we should be seeing here, according to the indicator, is 338 traded contracts by one entity or one trader. Okay, so that's one way that you can kind of see what the big boys are doing. Right here, you would assume they're getting in to go short. Now, you can't always assume that. They might be exiting a trade, or maybe they're on a long-term plan and you're on a short-term plan. So you can't just trade these in a vacuum. Of course, they're just another piece of information. So that's what happens at 8:30, and we're going to skip forward a little bit to the first volume market stop. Now, if you've been following me lately, this is my main strategy, are these red squares. If it's a stop for a long, this is a stop short, stop for long, it would be a white square. And it happened around the opening high here. And so I thought that was an excellent place to take my first shot. So I went short right there. Who knows, it's probably more down here, something like that by the time I got in. And I was on the right side of it to begin with, held it through the chop, was hoping that this kind of pullback was just retesting the area and then we'd go down. And I was hoping to try to get down to this liquidity down here, a nice big winner. Now there are warning signs. There's liquidity up above here. And so it's not a clear day on which way the liquidity is going to be pulling the market. Typically, not always, typically the market is drawn to the high areas of liquidity. Okay, so let's say these weren't up here and they were stacked down here underneath this one. That'd be a much higher probability, not guarantee, but probability that we would be going down. Okay, and as we'll see, it came up. I was hiding above here because I'm going to keep my stops short while I'm trying to keep my targets long. Okay, and that's definitely going to come into play. Pay attention to that. These little dots I'm not going to cover. They're a part of an imbalance detector with the TTW trade detector. Those are something I've been kind of just monitoring. They're not a major source of my strategy. The major source of the strategy, of course, is the volume stops, market volume stops. Okay, so that's the first thing that happens to me. So I'm stopped out on my first trade. Now we get up to the high levels of liquidity. We got 2 more volume stops here, and we've got another sell sweep. Okay, now I should have been smart enough to realize that we're probably going to want to clear out this liquidity before we turn around. But it looked like we had added liquidity here, that it just got stronger as we came up after these volume stops. Plus the sweep was in there, plus this little, if you can see these little dots here, that is an iceberg that executed right there. So I took my shot again. I went short. Again, I'm trying to target way down here. And we clear right here. I've been stopped out again. All right, and I'm stubborn, so I've gone short again. And let's see here. I got stopped out. Maybe I took 2 shots at this one. I got stopped out a 3rd time. So I've been stopped out 3 times. So I don't remember the exact point. I think maybe I went short here and then got stopped out on this here. And then when it started breaking down, I got in once again, right? And then of course that defeats my theory that we were going to go up and clear those out. But that's the way the market is. So let me show you something else. This is sort of a variation on a cumulative volume delta, except it's following along with these volume stops. So it's tied to a 0 line. So the best way I can describe what this is doing is it's sort of like a CVD tied to a 0 line over a certain period of time, so you can kind of read the CVD easier. All right, so instead of just something constantly kind of gradually ticking up as a CVD might do, it's always kind of looking to return to the 0 line. So case in point, on the first volume stop, we come up and of course it detected a high spike in volume there. So that's why it spiked up. But after that spike is cleared out, the market lost a little bit of interest after that, comparatively speaking. So we traveled back to the 0 line. Okay, now these are market orders. All right, and again, of course, it's going to spike at the volume stops. It spikes here at the volume stop and then fades. Okay, now one strategy that's popular among the TTW crowd is a divergence in the volume stops, in the volume detector down here. And of course, in context only, right? Not just out of the blue. It has to be going with the mood of the market. So you see that this volume stop back here was higher. You know, there was more interest back here than there was here. This volume stop wasn't as great. So theory being, maybe the market is exhausting a little bit, maybe it's losing a little bit of interest, or the aggressive buyers are out of guns, you know, they're out of bullets. And so you can have more conviction that the market might fade at this point. So like I said, I know I got stopped out 3 times before I got this winner. So I don't remember exactly where that was, but I did get back in, probably somewhere in this neighborhood down here, after I saw this fading off kind of hard. And this is what I want to show you. So yeah, it takes some guts to hang out, right? It takes some guts to hang out, but because you're going to get shook out of this with most strategies, all right? And that's why new traders and experienced traders are so focused on their win percentage, right? They exit early. Usually their stops are too big, and they exit too early on their winners because they get shook out of the market. But the volume detector down here is still pretty faded. There's not much strength to it at all. It's in the red, so it's below the 0 line. You know, we peak above a few times, but even here there's a tiny divergence. Here is the spike on this section, and then it gets lower here and then lower here, and then we crash. Okay, so this trade was more than enough to make up for my previous 3 small stops. All right, so that put me into profitability, and that was my day. I didn't even get in on this, which would have been a smart thing to do. Actually, I did get in on that. Look at that. So I don't know why I didn't detect my trading back here, but this is a trade I took afterwards. So that's what this is. I don't know where it didn't record my trades previously, but it recorded this. So who knows what was happening there. But that's the gist of it, right? You want to get these big wins, and you want to keep your losses tight. Okay. Now the only problem that you may have is on a strong trend day, and this is where you're going to have to spot these things on a very strong trend day, that the market if it just keeps going up, you're going to keep getting these red volume stops, and it's never going to fade back out. Okay, so that's why we say everything in context, no magic bullets. You still have to learn trading properly, of course, and but this has made it so much easier to take bigger winners and smaller losses, and that's why I've been pumping this TTW Tradefinder recently. It's been great for me. Hope it's great for you. Again, there's a link to it in the video description down below, and a small discount. All right, peace out.